Okay, now I think we have Victoria with us here on the line. So Victoria, are you there?
Hello.
Victoria, we invited you here today because we wanted to know a little bit more about Freedom Foods.
Yep, they're an Australian company and they manufacture cereals, muesli bars, and plant-based products like almond milk, and they sell them to a big supermarket.
So would you say you mentioned plant-based drinks? Would this be more like a sustainability company, or how do they brand themselves?
They do have a bit of sustainability because almond milk is more sustainable than cow's milk. There's less land that's being used. Also, that they have no genetically modified products.
So they are one of the good guys.
Well, you'd think so.
But when we looked at the share price development for this company now, so this week we saw a drop of 94%. So that's a lot. So what happened?
The stock was suspended for 9 months.
Suspended. So what does that mean?
So no one's allowed to trade in the stock. And that usually means there's been some bad information released, or the company needs to update the market. And it can be at the company's request. They can request the Australian Stock Exchange to be suspended, or it could be the regulator, Australia's corporate regulator, ASIC, could also impose that on the company. But this was at the request of the company that all trading gets suspended.
So what kind of led up to this suspension?
So there was some accounting irregularities that were uncovered, and these were some aggressive capitalising of expenditures, things related to their new product line. And also they now have 2 securities class actions against them. So their shareholders are suing them for this misleading and accounting information that they were giving.
So you say capitalizing expenditures. So that means like putting expenses on the balance sheet as an asset instead of just expensing it right away on the income statement, right? So what kind of expenses were these?
So they were capitalizing things like electricity for the new product lines and the equipment that they built and created, but they decided to be capitalizing a lot. They should not have been categorized as something that was going to give a future revenue stream.
So what's kind of the effect for the profits of capitalizing?
So it decreases the expenses, and because it puts them onto the balance sheet as assets. So it would increase the net profit by removing those expenses.
It definitely sounds like electricity should be like expensed right away because it's like an operating expense. And it's hard to argue that electricity a couple of years ago can be like depreciated in the future. But that's basically what they argued here.
Yeah, so it was very aggressive in terms of capitalizing. So going beyond what anyone probably thought was reasonable.
Aggressive accounting. Did the auditors okay this?
They did. They signed off. And then when questioned, they said no comment. And it was a client and auditor privilege commentary. They didn't want to go into it. So, and all of this kicked off because of a whistleblower who was maybe inside the company notified the Australian regulator ASIC there was something fishy going on. So it wasn't the auditor who just discovered this. So a whistleblower came forward. So
Okay. So if I look at the numbers a bit, they had like huge amount of revenue growth over time. So they started off somewhere in 2015 with around 100 million in revenues. And in 2019, they reported something close to 500 million in revenues. So big revenue growth. And I think the market loves that, right?
Yes, they're quite fixated on it. And that's often what will get headlined in earnings press releases, in the news reports, people are chasing those revenues.
Yeah, and then when I looked at the original 2019 financial statements, they reported a 22 million profit, but then it was restated in 2020 as being a loss of 146 millions instead. So it was quite a huge turnaround. Then in 2020, they reported a loss again of 175. So these losses then became to life due to the aggressive accounting that was reversed then.
And it made that some of the new product lines that they were selling, that they were actually selling them below cost. So they were then making losses on products that they were selling because they hadn't factored in those expenses. So it was part of this huge loss, that they got themselves into.
I mean, one question, Victoria, here is that could we as investors somehow have seen this coming?
There could be some clues in the cash flow statement, and bringing together the income statement information of how the revenues are tracking versus the cash flows from operations. You can see that there's something not quite right. And often the cash flow statement is quite helpful for us to try and understand the real picture, because it's harder to manipulate cash flows. And also very, very large outflows of cash flows in investing starts to put a bit of a question mark.
Yeah, so you basically say that, okay, the profits on the income statement told us one thing, that things were quite stable. But when we look at the cash flow statement, we saw that the company was actually spending a lot of money, but it didn't have any impact on the profit because they were just capitalizing these expenses. So maybe one thing we could do as like analysts would be to check how is the accounting profit evolving over time, and compare that with the like free cash flow, for instance. And if these guys start diverting from each other, that would be some kind of a red flag.
Yeah, that's right. It's a good red flag. And
yeah, because these accounting profits should basically mitigate timing problems of cash flows, right? Because otherwise we could just use cash flows as a measure of performance. So over time, these profits and the cash flows should sort of move in the same direction. But in this case, it was clear that maybe the accounting wasn't done in the way it should have been done.
So is it kind of a classical problem where you have earnings or accounting earnings that are there to kind of tell you something about the future or be better predictors of the future than cash flows, but because you want them to be a good predictor of the future, you also need to allow the manager some discretion. And if this discretion is used in the wrong way, it could be used to manipulate earnings.
Yeah, that's right. And because we put a lot of assumptions into the profit number, because we have to determine periodic profit, and we want to chop it up into discrete 12-month periods, and some of those assumptions can be too aggressive, and these were assumptions, but they were aggressive. So it's an important thing, that the net profit number has assumptions in it, which can be a force for good for determining periodic profit, but could be a force for bad in a way if they're used aggressively.
Victoria, would you say that this is kind of a school book example of earnings management?
Yes, definitely. And it's a great case study for students to look at and to see what can go wrong. So it might be our new Enron, because we've talked about the Enron scandal for a very long time. WorldCom, which is back in 2002, another scandal. This could be the new scandal that we talk about.
You mentioned WorldCom here, and that was actually one of the really big US scandals back in the day. And they had a similar thing where they capitalized expenses that should just have been expensed right away. And I think there the amount was a big amount, something close to like 10 billion US dollars. So they basically just capitalized operating expenses like wages of workers. So these workers maintain the telecom systems, and the company just argued that, yeah, we will get revenues from this telecom system in the future. So that's why we can capitalize now and then match the revenues with the expenses in the future when we get the revenues. In that case, the internal auditors noted this. In Freedom Foods, we had a whistleblower. But basically, we are also partly saying here that maybe we could have spotted it, we three as well.
That's right.
Yeah, definitely. So, Victoria, to sum up, what have we learned from this case?
You can have the freedom to capitalize, but be careful.
Capitalizing can turn really ugly. That's a great lesson for us and a great insight. So thank you, Victoria, for being here once again.
Thanks for having me, and happy 30th anniversary episode.
Thank you. Yeah, this was our 30th anniversary. That's correct. But that doesn't stop us. We will continue next week with new insights in the After Class podcast.